What if your government quietly started exchanging mountains of paper money for solid gold? Not jewelry, not coins to spend. We're talking hundreds of tons of pure gold bars, stacked deep inside secret vaults. That's exactly what China has been doing, month after month, year after year, and the world is only starting to understand why. Over the past 3 years, China's central bank, the People's Bank of China, has been buying gold like never before. Officially, they admit to holding a little over 2,300 tons of gold, but analysts who track customs and shipping data believe the real figure is far higher. Some estimate China may be quietly adding about 30 tons every single month, far more than it reports. Why would a country do this? To understand, think about what gold is and isn't. Gold isn't like dollars or euros that live as numbers in a screen. It can't be printed, hacked, or frozen by another government. During wars, sanctions, or economic crises, gold sits in a vault and remains yours. Its value is recognized everywhere, across cultures and centuries. For a country worried about the future, that makes gold the ultimate insurance policy. The urgency behind China's buying spree became clear in 2022, when the US and Europe froze roughly $300 billion of Russia's foreign reserves overnight after the invasion of Ukraine. For many nations, that was a shock. If the West could immobilize Russia's dollars and euros, what would stop it from freezing someone else's? Suddenly, the world's most trusted safe assets didn't feel so safe. Gold, which can't be blocked by a keyboard, looked more attractive than ever. This is where China's plan gets even bigger. It isn't just buying gold to keep at home. Through the Shanghai Gold Exchange, already the world's largest physical gold market, Beijing is inviting other countries, especially friendly or non-aligned ones, to store their sovereign gold reserves inside China. In other words, China doesn't just want gold, it wants to become the world's gold banker. Today, most of the world's central banks keep their gold in places like London, which has centuries of experience and instant market liquidity. London's vaults currently hold more than 5,000 tons of gold, but they operate inside the Western financial system, the same system that froze Russia's money. China is betting that some nations will move at least part of their reserves to Shanghai, where Western sanctions can't reach. This fits into a much larger strategy called de-dollarization. For decades, global trade and savings have been dominated by the US dollar. By building huge gold reserves and offering to guard other countries' gold, China is creating an alternative financial network, one that doesn't rely on dollars or on Western-controlled payment systems like SWIFT. It's also pushing the use of the digital yuan and its own international bank payment system, CIPS. Together, gold plus these new digital tools form a parallel financial universe that Beijing controls. What does all of this mean for ordinary people? First, it helps explain why gold prices keep hitting record highs, recently soaring above $3,700 an ounce, and with some forecasts pointing toward $5,000. Central banks are buying more than at any time since the 1960s, and China is the biggest single player. When central banks compete to lock up a limited supply of gold, the price naturally climbs, which affects jewelry costs, investment returns, and even inflation protection strategies for households. Second, it signals a slow but important shift in global power. The US dollar still makes up about 59% of global foreign exchange reserves, but that share has been slipping for years. If more trade and savings begin to flow through gold and yuan-based systems, the dollar's dominance weakens. That could eventually change borrowing costs, trade balances, and the way international crises are managed. Of course, China's approach isn't without risk. Gold is valuable, but it doesn't pay interest, and sudden swings in price can still hurt. Storing and securing thousands of tons of gold is expensive, and many central banks still prefer London for its deep liquidity and centuries of legal protection. But for countries that fear sanctions or political pressure, those drawbacks may be worth it. So when you hear that China is on a gold-buying binge, it's not just about shiny metal. It's about building financial independence, a way to protect wealth and increase influence in a world where trust in paper promises is starting to fray. The next time gold prices make headlines, remember, behind those numbers is a deliberate strategy. China is preparing for a future where power isn't measured only in dollars or data, but in something timeless and tangible. And that's why, even as the world debates digital currencies and high-tech finance, ancient gold has suddenly become the hottest asset of the 21st century. If this explanation opened your eyes, subscribe for more clear, real-world financial stories, and share your thoughts in the comments. Do you think China's gold strategy will reshape how the world saves and trades? Or will the dollar's dominance continue?